What's going on, guys, and welcome back to another video. So it's been requested many times now for me to make a video on if you're better off holding individual stocks versus ETFs. So we're going to answer that today by looking at my overall performance of my ETFs versus my stocks. We'll then have a look at pros and cons for both ETFs and holding individual stocks. And finally, we'll give my 2 cents on which I believe is better long term. So if any of this interests you, it would be great if you would stick around, and hopefully by the end of this video we'll have a lot better understanding on which is actually better for beginner, intermediate and advanced investors. So with all that being said, let's dive right on over to Trading 212. At the moment we have 31 holdings within my portfolio. We are just under €8,000 in value and are up just under 13%, or €909. So if you haven't seen any of my videos before, the main kind of incorporated compass of my overall investing strategy is the dollar cost average. So that's why I hold a lot of individual stocks as well. But at the moment we have about 28 individual stocks and 3 ETFs. Just a very brief overview. In terms of my stocks, I have them, the individual stocks that is, I have them in different portfolio pies. Communication services up 30.6%. Consumer discretionary is up 2%, staples is up 2.4%, energy sector, which has an ETF in here, is up 14.2%. My main ETFs here is up 16.7%. Now at the moment I hold kind of two main ETFs as such, is the Vanguard S&P500, which are up 17.1%, and the Vanguard FTSE100 were up 14.4%. More individual stocks then in the financials, up 31.5%, healthcare is up 9%, industrials is up 16%, we're up 9.5% in penny stocks, real estate is up 5.8%, and finally the technology sector pie is up 14.1%. So if I was an onlooker looking at this portfolio, I'd make the questions of why do I hold the likes of companies like 3M, Coca-Cola, etc. that are pretty much standard kind of safe companies, and they're not high growth stocks like some of the Apple or technology sector stocks that I hold. And kind of there is a few reasons for this, because again, the main reason why a lot of people hold ETFs is for diversification, but there is other reasons as well why I hold these individual stocks as well. So now we're going to look through some pros and cons of holding individual stocks versus ETFs. So let's start off with the advantages of stocks, and the two reasons why I hold so many individual stocks. Firstly is the dollar cost average, as I mentioned in most of my videos. So by holding so many individual stocks, it kind of always gives you an example of the dollar cost average, and always gives you good opportunities as well to take advantage of dips. So for example, if you held ETFs, because they are so diversified, they rarely go back down in value if you hold them long term. So we can even see from my own individual ETFs that we looked through a while ago, they're up about 17% at the moment. So it would be kind of hard for them to go down 17% at any given time. So effectively, if I did buy in again, I'd be actually worsening my dollar cost average and bring that up. So that's not what I want at all as a long-term investor. So a great opportunity to dollar cost average is by holding a lot of individual stocks. So again, different sectors react differently to different market conditions. So it kind of always poses an opportunity to dollar cost average in any company at any given time if they dip. And certainly the more companies you hold, the more opportunities you will have. Second reason, or advantage should I say, for holding individual stocks is they have a better risk to reward ratio. So obviously they are a bit more volatile than your standard ETFs. However, they do give you a lot more advantages to increase your capital. Just as an example here, AbbVie is up 20%. We have the legs of Alphabet Class A up 39%. If you keep jumping down here, Bank of America in the financial sector is up nearly 60%. Caterpillar and Industrials is up 45.7%. Chevron up 42.5%. ExxonMobil and other energy stocks up 65.5%. Facebook up 13%. Goldman Sachs and other financial is up 73%. And if we keep going down here, we can see the likes of JP Morgan and Chase up 59%. And keep scrolling down to the bottom even here. For another example is Walt Disney up 50.65% at the moment. And the reason a lot of the majority of these individual stocks are in the green, now it's worth noting that some are in the red, just like Tesla at the moment. But again, a long term, I do feel that once I pump in further capital at these discounted prices, in the long term, it will go back to parity and I'll be actually making more profit because I got on at a better dollar cost average. But probably the main reason why a lot of the individual stocks are doing so well is the dollar cost average aspect. So that isn't really present in ETFs, so that's certainly a disadvantage. So now let's look at two pros and one con of holding ETFs. So the first pro of holding ETFs is obviously diversification. So as an example, the S&P 500, which is a very popular ETF, which tracks the top 500 companies in the US, currently has 507 holdings. We can even see here on screen how diversified they really are, with IT leading the way with over 27% within this ETF. We then have all other sectors within the overall market as well within this ETF. So as an example, let's say you just held Apple on its own. Now Apple has been doing very well over the last few years. However, if you had all your eggs in one basket, so to speak, and Apple kind of went down a fair bit in value, or if it had some very bad news or the fundamentals changed, then you're really open to exposure, effectively giving you a lot more risk. But again, if you hold the overall ETF, Apple is one of these constituents, but it's only one of 507 holdings. So if Apple went down, another company could go up. Now, an example I usually like to give is Coca-Cola and water. So let's say Coca-Cola came out that it gives you diabetes, which it obviously does with all the sugar. But let's say that was a new factor. Well, obviously the share price in Coke would go way down and water stocks would go way up. So it just goes to show if one sector goes down, another goes up. It mightn't give you an overall bigger overall margin by holding an ETF, but it does certainly give you a lot more protection. So as I said, this gives extreme diversification. However, diversification is a protection against ignorance, as Warren Buffett famously said. So it's kind of a protection against people that don't know what they're doing as such, in a way. So even though it is great to have diversification and protection, sometimes you might be overprotected, which does affect your overall returns. Now, on average, the S&P 500 goes up between, let's say, 7 to 12% annually. So that's still a good return. Firstly, if either you're young and have a lot of years to compound it up, so that's a great advantage there. And second of all, if you were a bit older and had a lot more capital at play, it is great to be able to sleep at night as such. So by having a large amounts of capital, 10% a year is certainly great in my opinion as well. So even if you had 100,000 invested, you're making on average about 10,000 a year, and that's compounded annually as well. So again, the next year you'd have 110,000 to invest, so on and so forth. So if you have time and capital behind you, the ETFs are a great opportunity to make easy money long term. And this kind of leads on nicely to the second pro, is in terms of its passive, because of this diversification. And again, this is all actively managed ETFs. So again, we're just using the S&P 500 as an example here, but it could be the FTSE 100. And my other ETF is the iShares Global Clean Energy ETF. But long term, it's passive. You're able to sleep at night. There's not a lot of risk involved as such. If you hold long term, it's nearly impossible to lose money in any kind of the main ETFs, such as the S&P 500. Again, because they're so diversified. So passively is certainly a way forward for a lot of people that kind of, if they're not really too much into investing as such, they just want to have a kind of overall scope of the market, then ETFs are certainly a brilliant way to do so. One well-known disadvantage or con of holding ETFs, in particular in Ireland, and again I'm just using Ireland because that's kind of more relatable to me, they're heavily taxed. So we can see here on moneyguideireland.com they make a great point that any dividends you receive from an ETF are subject to 41% tax. However, many ETFs accumulate dividends instead of paying them. Therefore, buying accumulating ETFs rather than distributing ones will simplify your tax returns and increase your overall profit. Now, one to really note here is this point. The third point is that if you don't sell your ETF, then every 8 years you will be deemed to have sold it and will be liable for 41% tax on gains preceding 8 years. So that's kind of a huge disadvantage in my opinion. Now, it's very handy to hold ETFs, as again they're fully diversified and they offer passive income, but you certainly do get penalised heavily, particularly in Ireland, on tax. Another point I just want to address as well is that I've been asked quite a lot in the comment section, how come again if you're up, let's say, 17% in your ETFs, why are you actually only up overall about 13 or 14%? Now that's an interesting question, but again you have to think about dollar cost averaging. So if we're up 17% here, we only have €700 invested. So it's very hard to find a point where we can actually improve my dollar cost average. So let's say we're up 16.7% at the moment here, but if we doubled our amount invested, we'd only be up about 8% because effectively we're buying in at a higher price than originally we did. So that would technically, so if we bought another double this, it would drop into half. So that it just goes to show, like, it's great to have being up more in ETFs than your individual stocks, but it's very hard to actually increase your overall capital within ETFs without affecting your dollar cost average. So again, just an example, if we did double this to, let's say, 14 or 1500, we would only be up 8% straight away off the bat because, again, as I already said, we're buying in at a higher price. So that's one of the great benefits of buying individual stocks as well, is because if you have so many individual stocks, you don't have to buy into any of them individually at any time until they go into the red. And different stocks kind of react differently to different market conditions. So one stock could be up 30%, another stock could be down 5%. But because one stock is down 5%, it gives you an opportunity to buy more within that particular company. So my kind of 2 cents on the matter of if you should hold individual stocks or ETFs, like most things, in particular investing, I like to see both sides of every story. And in my opinion, I do like, because there is pros and cons to each, I do like to have both of those within my overall portfolio, as we can already see. Now, in terms of allocation, I do kind of recommend, again, I'm not a financial advisor, but for my own portfolio alone, I do like to have about, let's say, about 10% of my overall capital within ETFs, and that's kind of seen already. We have about €760 in my ETFs, and my overall account balance is just under 8,000. So we're probably well on our way towards the 10% mark at the moment. Give another few hundred, and we would be there. So again, my own personal opinion is to always have both individual stocks, which will help bump up your overall kind of risk reward ratio, and having a broad foundation base of good ETFs will also be great beneficials to your portfolio. So again, I'm going to be holding about 10% ETFs at the moment and 90% stocks. But as my capital actually grows over the next few years, I probably will be allocating another 5, maybe even 10% to ETFs. But I wouldn't really want to go over 20% in ETFs because, again, if you're young enough and you kind of have a bit more risk in you as well, a bit of more of a risk appetite, then you should be kind of looking for individual picks as well. And my form of investing is dollar cost averaging, so I do like having quite a few individual stocks going forward as well. So at the moment, I have about 10% in ETFs and 90% in stocks. So in terms of my 2 cents, I do like both, and I can kind of see the pros and cons to both as well. But if you do want to put all of your money into ETFs, there's nothing at all wrong with that. Again, just beware of the additional tax that you might have to pay within these ETFs. But again, it's really up to your own individual style of investing, and it depends how risky you are, or what age you are, how much you have at risk, etc. But even if you are investing in individual stocks, I would recommend diversifying across at least 5 to 10 individual stocks, and that's a minimum. And don't have them all within the one sector. Again, this is just my own kind of what I've learned myself, what I wouldn't do. Like, I wouldn't buy 10 stocks within, let's say, the electric vehicle sector and have no other stocks within any sectors, because you're shooting yourself in the foot if things go wrong, and can easily go wrong. So what I would recommend, if you do want to hold just individual stocks, to always diversify as well. So that's pretty much it for today's video. If you found it anywhere helpful or interesting, it'd be great if you consider subscribing if you're new around here. And most importantly, if you have any questions, comments, queries, or suggestions, please don't hesitate to comment below, and I'll be sure to get back to you as quick as I can. I'd also be very interested to see what you hold in your own portfolio in terms of allocations and percentages for ETFs to individual stocks, and if you have any other pros or cons for either stocks or ETFs that you would consider for other individual investors going forward as well. Thanks very much, enjoy the rest of your Saturday, and I will see y'all in tomorrow's video.